you'll be getting the PDF also. I'll be sharing with you an important PDF. Everyone, those who are in the class, kindly note. I'll be sharing with you an important PDF of RBWM. Okay? Majority of the paper will be through this only. That PDF and the lectures, what we take. You need not read any other book. You need not read any other book. Okay? Yeah. One thing you can do is give the tests of Adda 24/7 because you have in your package you have them, and follow the ebooks of Adda 24/7. Do follow them. Those are also good because the tests are created by we only, means I have created for RBWM. So do give the tests. Okay? And kindly note, paper is very easy. Okay? So RBWM is a new paper. It is just added in 2023. Earlier it was not there. Earlier this retail banking was there, but that was for CAIIB. Earlier this subject was for CAIIB. Okay. So now they have added it to JAIIB. So it's a new paper just added to the JAIIB syllabus. In the paper, these following modules are there: retail banking, retail products and recovery, support services means marketing, and then it is wealth management. See, this first part is very easy: retail banking, retail products, recovery. All you have is your saving, current, FD, loans in retail products. Retail banking, it's introduction, completely introduction. Support services means marketing you have. So that's okay. What's difficult, what comes is wealth management. And there is one more chapter which you get difficult. That is your branch profitability. Chapter number 3 in module A. That is very difficult. So that you'll have to check. Okay. Module A. What does module A consist of? It consists of introduction, retail banking, role within the banking operations. Means what is the role of retail banking? Now one thing you note, everyone, retail banking is the banking of the future. Okay? All the banks are focusing on retail banking only now. Why? Because one very good thing about retail banking is the NPAs are very less as compared to your this corporate banking. Very less. Okay? Why are they less? Why is retail banking having lesser NPAs? The reason is very simple. See this. I'll give you a simple logic behind this. Suppose if I am having, let's say, 1 lakh rupees. 1 lakh rupees, okay? 1 lakh rupees I am having. So, in corporate banking, okay, I'll give 1 lakh rupees to one customer, full 1 lakh rupees. Okay. And in retail banking, what will I do? Retail, I'll give 10,000 each. So 10,000 each, 10k to 10 customers. Okay. Now logically, you only tell me which customer or which banking has higher chance of NPA. Means one customer can become NPA more chances, or all the 10 customers can become NPA. Which is having more chance? Is there one customer becoming NPA more chance, or is it 10 customers becoming NPA at the same time more chance? What do you think? 1 or 10? Just write in the comment section. Those who are watching on YouTube, you also. 1 or 10? Just type 1 or 10 becoming NPA. What do you think, everyone? One customer will become NPA, or all the 10 customers will become NPA? Isn't it logical? There is more chance that this customer will become NPA, this one, NPA. All the 10 customers becoming NPA is very less chance. So that's why what happens, the amount gets distributed, okay? That's why the chances of NPA are less, and that's why all the banks are focusing on retail banking now. Okay? Not only banks, kindly note, not only banks. This is focused by NBFCs also now. NBFCs. Bajaj Finance, Bajaj Finserv, okay, Muthoot Finance, all Tata Finance, all are focusing on retail banking. So that's why role within the banking operations. You are a very important personality now. Retail banking is very important nowadays. Applicability of retail banking concepts means how the concepts or distribution of money is followed in this retail banking. Distinction between retail and corporate banking. This is also a topic. Means distinction means difference. One difference is already I have told you this. Okay. There are many differences. Then it is branch profitability. This is the toughest subject, toughest topic. Kindly note. This is the toughest topic in your entire RBWM. I would say that's okay. Means one of the toughest topics. Three topics are very tough in your RBWM. One is branch profitability, second is wealth management, and third is tax calculations. Very difficult. Okay. So now you'll be having this latest tax slabs, 12 lakh. So you'll be having that, everyone. Okay. So this is about module A. Module A is okay type. Branch profitability is tough. Baki remaining topic is okay. Module B. This is what you do on a daily basis in banking. Daily basis. Customer requirements. What are the requirements of the customer? What do they want from the bank? Customer wants service, isn't it? And the products which they need. See this. Nowadays banking has changed. Now customer wants two things always. One, product they require. It's not product which you have. Product which they require. And second is service. Two things they want always nowadays. Remember, product which they require. Now the preferences of customers have changed. Customers are not the same as they were earlier. They used to call you sir, sir, sir. Nowadays these customers have become very knowledgeable. You tell them something, immediately that person takes out the mobile and took Google and shows you, sir, this is the latest RBI circular. Right? Means customers have become learned customers now. They are not the customers of 2000s or 1990s. Yes sir, आप जो बोलेंगे वही सही है. Yes sir, don't loan. 1 month, 2 month delay. Yes sir, okay. कोई problem नहीं. 1 month, 2 month delay. Now 7 days delay and customer immediately goes to any agency, your head office, immediately mail, RBI, Ombudsman. Customer knows everything nowadays, isn't it? So that's why customer requirements have changed. Product development process means how to develop the products which are required by the customers. There are many new products which have come in banking. Okay? Sweep in, sweep out. You all might be having this sweep in accounts, right? Sweep in, sweep out. Then FDOD is common. 3-in-1 accounts. All of you are having 3-in-1 accounts now? 3-in-1 means what? Saving, demat, and your broking account. All the three are combined. 3-in-1. These are the new products which are required by the customers. 3-in-1. How many of you have gone through 3-in-1 account? Do you have it in your banks? 3-in-1 accounts. That is the preference of many customers nowadays. How many of you have seen 3-in-1 accounts or sold 3-in-1 accounts? Anyone? So here, that's the point over here is product development process. You have to design the new products constantly. Credit scoring. So here comes CIBIL. You all have that CIBIL rating nowadays. Not only CIBIL, there are 4 companies. CIBIL is just one company. You have that Highmark, right? Then Experian, and one more is there, no? Which is that next one? E. It names from Equifax, isn't it? Equifax, Experian, Highmark, and CIBIL. All the 4 companies are used by various banks in our country, right? Then Credit scoring. Based on this credit scoring, you give the loans. Then important liability products. Liability means all your CASA, current account, saving account, FD. Okay. Important retail. Okay. By the way, we are going ahead, but do you know me? Who am I? How many of you know me from earlier? Or otherwise, you'll say, sir, हमको नाम ही नहीं मालूम और आप क्या बोल रहे हैं? Okay, just I'll give you my introduction. I am Vishal Mantri. Okay. I'll be handling your RBWM. Now, if you check my credentials, who am I? What have I done? So, I am an engineer, basically from COEP Pune. Then MBA, double MBA. Then worked in bank for 13 years. Bank means not the bank normal bank which you see. Branch, this branch, that branch, retail, saving, current, FD loans. I worked in 4 departments of bank, and if you see the names of the banks, I have started my career from Cosmos Cooperative Bank, Pune. Then I worked in HDFC Bank. Then I worked in Citibank, USA. Then I worked in DBS, Development Bank of Singapore. Okay, DBS, Singapore. So I worked in these 4 banks and at the senior managerial positions. I started my career as an assistant manager and then left banking in 13 years at a senior manager trade finance position. What are the departments I have worked? I have worked in almost 6-7 years. 6-7 years I have worked in retail banking and corporate banking. Retail and corporate. Now, what is retail banking? You know, retail banking means whatever you do. But my retail banking was different, a bit different. Why? My retail banking was whatever you are experiencing now. Right now, what are your experience? All the pressures, daily pressures. I was in HDFC Bank in retail banking and Cosmos Bank. Daily pressures, target, कितना हुआ, क्या लाया, आज कितना, कल कितना, what is in the pipeline, क्यों नहीं आ रहा है. That was my retail banking when I was in that career, retail and corporate. Then next I was in this trade finance in Citibank. Trade finance means all the trade finance, international trade finance, LC, bank guarantee, collection documents, import, export, everything. There also I was a senior manager. Then last bank of mine was DBS, Development Bank of Singapore. Same, senior manager, means manager. In Citibank I was manager. From there I went to senior manager. So senior manager, and then I left banking. At very young age I left and started my own business. Business means teaching is my passion. Means I've taken it as a business also, not an issue. So teaching, and then I give training to corporates also, means corporate bankings. I am director of one of the bank now, presently. Means director of one of the banks over here. So you are in the right hands, you all guys. Okay. So I know ins and outs of bankings since many years. I teach to JAIIB as well as CIB. Okay. CIB also I teach ABM and BFM. So treasury, trade finance, all these are my favorite subjects. Okay. So you will be meeting me in CIB also once you clear your JIB. So enough of my introduction now. Let's move on to the topic, isn't it? Because why did I give you? Otherwise you'll think who this guy is, who has come, we don't know. Okay. So next, important retail asset products, liability done, asset means basically your loans, all the types of loans, home loan, personal loan, LAS, loan against shares, then loan against gold, all these, retail, here specifically it's mentioned retail, okay, retail assets. Otherwise CC term loan is also there, but that is a corporate loan. Credit and debit cards, okay, this is also one business. This chapter is also difficult. Difficult in the sense you get one case study in credit card. I'll take it. Remittance products. Remittance means all your NEFT, RTGS, Now these are just two names. There are various things in remittance. UPI, NAC, NAC is there, ECS is there. Okay. Digitization of retail banking means all the new technologies here. Mainly, the focus will be on three technologies. One is your digital banking, next is your AI, artificial intelligence, and third one is your blockchain. So the main focus is on these three technologies. Role of AI and technology in banking. So same thing again. Recovery of retail loans. How to recover the retail loans? What are the various SARFAESI acts? SARFAESI Act, what is DRT, what is this Lok Adalat, all these things. Then MIS, Management Information System. MIS means the passage of information. Then you have securitization. Securitization is a new topic. Many of you might not be knowing it, securitization. I'll give you a simple line. I'll explain you what is securitization. Securitization is basically selling the loans. Selling the loans means, what do you mean by selling the loans? See here, I'll give you an example. SBI. Okay, this is SBI. Let's say SBI is having home loans. Okay, of 1,000 crore. All the home loans. This guy, that guy, 1,000 guys given home loan. Now SBI has locked up the money. Locked up. Locked up means what? This money is given to the customers. Now money is locked. So what does the SBI do? SBI sells these loans. Selling to SBI Capital. So this is known as SPV, Special Purpose Vehicle. Okay. So it will sell the loans to SBI Capital. And SBI Capital will give them around 900 CR. 900. So for 1000 CR, they'll give them 900 CR. So their money is freed. Now they get 900 CR. Whereas earlier they didn't have any money. So this is known as securitization. This SBI Capital will further sell it to investors. Okay. So that is securitization. That is, I have explained to you in a nutshell, in summary. It's a big topic. Okay. I'll take it whenever it comes. Module C, marketing, support services. Very simple topic. Okay. An introduction, marketing introduction, then delivery channels, various delivery channels. What are delivery channels? Delivery channels means the way of reaching the customers. Reaching. See here, don't get confused between delivery channel and delivery model. These two are different things. Delivery channel means ways of reaching to the customers. It can be a branch, it can be your ATM, it can be your internet banking, it can be your app, it can be your phone banking, anything. These are all delivery channels. Next is delivery models. Models, you have 4 models: horizontal, vertical, predominantly horizontal, and predominantly vertical. This is a technological part. Okay. Then you have CRM, customer relationship management. This CRM is for HNI clients. HNI means what? Kindly note one principle in banking. See here, it's called as 80-20 principle. 80-20 principle means what? 80% of your business comes from 20% of your customers. Very important. 80% of your business comes from 20% of your customers. Remaining all customers are of no use to you, to be frank. So, these 20% customers who give you 80% business are called as HNIs. Then you have service standards, BCSBI. Okay, service standards. Then you have MKIS, Marketing Information System. It is a part of MIS only. MKIS, Marketing Information Systems. It is same as MIS, it is related to marketing. So this is module C. Module D. This is the toughest part, wealth management. Importance of wealth management, very big chapter. Okay. Importance of wealth management, investment management, tax planning, other financial services provided by banks. So importance of wealth management, this is the main topic, wealth management. Various terms are there. It includes your will writing, it includes your insurance, mutual fund, everything. Gold coins, bonds, various things are included in this. Then investment management, again it is a part of wealth only. Tax planning, another toughest topic. you are told to calculate the tax for the customer. Okay. Other financial services. Okay. Then this is module E, you can call it. See, officially it's not module E. Officially there are only 4 modules. But this is known as additional reading on housing loan. So you can call it module E. We will be dealing with module E in the start, because you all guys will be dealing with module E from tomorrow. Okay, tomorrow means Monday. Then once I complete this, then I'll be going to module A again. See, we'll be going it from module E, then we'll be going to module A, B, C, D. Like this we'll go. Okay. So lender's appraisal procedure means how to appraise the loans. What are the various types of appraisals? Housing finance, tax planning. So tax planning related to housing. So this will include your capital gains tax. This will be there. That's why this topic becomes difficult. Capital gains. Then you have mortgage advice. Means what are the various types of mortgages. Okay. Means you can call it this usufructuary. Then you have simple mortgage. Then you have conditional sale. Then you have English mortgage. Then you have this equitable mortgage. And last chapter is valuation of real properties. So how to do the valuations of all the properties? All the means properties means what? It means the properties related to your plot, your flat, your agri farms, your shops, your temples, your churches, all these things. So these are all valuation of real properties. Okay. So this was about RBWM. Now I'll show you what are the various samples. Okay, of product. Means just an idea of what are the samples in the in your basic RBWM. See, this is from your module C, marketing. You have these types of questions. What are the various types of products? Products are like this. See this: core product, generic product, core product, generic product, expected product, augmented product, and potential product. Just one example I am giving you. Okay. What is core product? Core means the basic product. Basic, for which we buy this. Toothpaste. Toothpaste is a core product. Now if I sell the toothpaste in a simple dabba, like I just take any rough dabba and give you the toothpaste. Le lo, toothpaste. Will you take it? No. You want best packaging. Why do you buy? How do you buy the toothpaste? You see the packaging, attractive packaging, hero, heroine, actor, actress, right? So here it becomes an augmented product. Means expected means what do you expect? Packaging, good packaging. Then the company gives the good packaging. Then it becomes augmented product. Then you have everything. दांतों में what? टूथपेस्ट में नमक है, कोयला है, नींबू है, अचार है, right? Everything you have this. Nowadays I think so Nimbu is there, and what all is there? Nimbu is there, namak is there. Now I think so some days they'll bring in mirchi, okay, in toothpaste. And what remains then? Sharbat, Nimbu sharbat is remaining, right? So this is all augmented product. So many things are given. Microbes, this microbe, that microbe. So many there in the teeth. Everywhere it is the same. It's basically the sales part goes in this direction only. Core product, generic product, expected product, augmented product, and potential product. In your banking also, look at your banking. In banking, what happens? What is your core product? Core product is saving current FD. In loans, you have this home loan, personal loan, and some home loan. Yeah, these are the two, three main retail products, right? So these are core products. Generic means what? From core product, it becomes generic. Generic means what? All the banks are having the same products. You check any bank, all the banks are having the same product, saving current FD. And in loans, home loan, personal loan, car loan, two-wheeler loan, LAS, These are the basic products. Generic means which are common to all. Expected. Expected means what? People expect something from you. This bank is good. This bank is not good. Expected. So empathy. Augmented means what are the additional services you are giving. For example, I'll give you one simple example. When you buy a new bike or a two-wheeler or car, anything, nowadays what is the trend? The trend is 3 years insurance. Nowadays they give you 3 years insurance free. At least in car they give you. Right? So augmented, something new. Similarly, when you buy a savings account, with many banks they are giving you now this. You buy the savings account or you open the savings account, they'll give you this what health insurance for 1 year free. Augmented, something additional given to the customer. What is potential future? What is future? Now people are expecting what? People are tired of all your normal saving current FD. People want something better. Internet banking also, people know it now. Now people are expecting blockchain. They are expecting AI. So this is potential, future. Okay. So these are the 5 types. This is just one example to show you how your ABM will progress. Okay. Then PLC, product life cycle. As we have the PLC in our life, and in our life also we have the same thing. We are children first, child, then youth, then mature, then old, and then up, boom. Jai Bhagwan, right? Here. So same thing product also does. Introduction, growth, maturity and decline. Isn't it? Same thing happens. As you have your life, similarly product has the life. Maturity means what? Where the product is having highest sales and highest profits. Okay? So every bank will try to keep its product where? Where will every bank try to keep its product? Here. Because sales are highest. So every bank wants maturity phase. Okay? This is the way the companies work or banks work basically. Okay? So introduction, growth, maturity and decline. These are the 4 stages, life stages in the product. Each life stage has its own importance. For example, in introduction, you have major investment and no profits. Why? Because you are just investing. You are trying to sell to the customers, introducing the product. See, this is our new product. This is my this is my that. Right? Introduction. Then growth. Do you know any product which was in the introduction only? It was gaining huge popularity. Any product you know? In the introduction only it gained huge popularity. Huge. People immediately ran for this. What was that product? Anyone knows? You have all used it. All of you have used it. Who can tell me? Introduction only. No, nothing. People, all of them went for it. What was it? Let me see. Who all are answering? It was Jio Mobile. You remember 2016? Just 9 years back, 2016. Jio came. Immediately, all over India, everyone was after Jio. Jio. Free. Introduction phase only, they gained huge popularity. But the investment was huge. So in introduction phase, you have to invest a lot. You don't get profits. Profits you receive it later. Okay? So growth phase means here your profits start growing, heavily growing. Okay? Growth stage. Then you have maturity stage. Maturity means your product is at the peak. Everyone wants it. Everyone. Which is the product which everyone wants it today? Means you can't live without that product nowadays. It is again internet data. Tomorrow, if the internet data becomes costly, do you know what will happen? All the things, all online things will immediately go, right? So, internet data, that is the most required product nowadays. It's at the maturity, highest sales. All the companies are having their share. Only three companies are there now in internet data, at least now. Jio, Airtel, and that Vodafone sometimes. And somewhere BSNL is also there. So four companies, isn't it? So basically, what does it mean? Remember, this maturity of the product or maturity stage of the product, every bank, every company will try to keep it at the maturity. And in decline stage, what happens? Your sales are decreased, your profits are decreased. So either you close that product or you give it new boost, something new you added. Okay, new boost is given. So in that case, the product again moves up. Okay. So this is about PLC. This same thing I have explained. Maturity stage, different stages. Okay. Now let's solve some questions. Advantages of retail banking include. Now you read this. Now it's your time. Enough. I have spoken a lot. Now it's your time. Give me the answer, everyone. Risk is less as the client base is large. Income is relatively more as spread is more. Spread means NII, difference. Stable model with less volatility. All of the above. So what is the advantage of retail banking? Is it A, B, C or D? Who can answer me? Yes? A, B, C or D? D, correct. D is the answer. All of the above. Okay, D is the answer. Got it? All of the above are true. Risk is less as the client's base is large. Income is relatively more as spread is more. Stable model. Okay, stable model means you don't have this year high growth, next year low growth, nothing. You have constant growth. Advantages of retail banking do not include. Now this is reverse. Do not. Risk is less as the client base is large. Income is relatively more as the spread is more. Spread. Stable model with high volatility and all of the above. So do not. You want do not. So what is the answer for this? Correct. Who's this? Ajay Kumar. Very good. The answer is. What about others? What is the answer? Answer is Venkatesh. Very good. Good. Those who are on YouTube, kindly answer. You also answer. Huh? And those who are on YouTube, kindly join the batches. Today the orientation batch. Tomorrow actual topic will start. Tomorrow means Monday. Actual topic will start. Okay. So the answer is C. Answer is C. Guys on YouTube, you also answer. Which one of the following is not an advantage of retail banking? Not. High cross-selling potential, high customer loyalty, less volatility in business, and high default rates. So which is not the case. Okay? Not a feature you can call it. Not a feature. Instead of advantage, let's say the feature. Feature. Which of the following is not the feature of retail banking? Correct, Mahesh, Venkatesh. D is the answer. High default rates is not the feature of retail banking. Okay? Retail banking always has lesser default rates because money is divided. Which one of the following is not a part of retail banking? Not a part of retail banking. Internet banking, mobile banking, providing term loan to projects and credit card facility, not a part of retail banking. Correct. Ajay Kumar, Nimisha, very right. Mahesh, good. So not a part of retail banking. Providing term loans. This is a part of corporate banking. Corporate. Do you know what is the level of corporate banking? When we say corporate banking, what is the minimum loan? Do you know in corporate banking? Generally, in all the banks, huh? Depends on bank to bank, but generally, I'll tell you, average loan given in corporate banks to any single customer is, when I was working, I used to give minimum loan of 500 CR. 500 CR. 500 crores. One loan for per customer. That is corporate banking. Huge. Very huge. Means you get so much afraid while giving the loan. If there is any mistake, then you can't repay it, isn't it? In retail banking, if you do some error, that error will be hardly for what? 1 lakh, 2 lakh, 5 lakh. Max to max 10 lakhs. Generally. Here the average size is 500 CR. Even if you sell all your property, you won't be able to get back the money, isn't it? So corporate banking is so huge. Kindly note. Okay, I used to give minimum 500 CR. Minimum per person. Not person, it's a company. It is given to the companies. Next, after outbreak of COVID-19, the future of retail banking will mainly depend upon what? Branch banking, brick mortar, digital, and none of the above. After this COVID-19, 20, whatever was there, na? It depends on what? Again, it is C. Okay, digital banking. Right? All the customers have turned into digital banking. You see, during COVID also, the banks were open. Right? Banks were open. And customers used to transact through online. Online banking got a major boost in COVID. Isn't it? The proportion of housing loan in retail loan segment is more than, means, very important question. Nowadays, housing loans are of so much importance, so much, okay, that they earn more than 60%, this 60% of the income in banks. Okay, 60%. They are more than, depending on bank to bank. Here, some banks have 75% also. Some banks have 50% also. Average is 60%, average. Okay. Some banks are there who get almost everything is home loan only. So depending on bank to bank, average is 60%. Okay. So that was it about the orientation, introduction. Okay. Tomorrow means Monday we'll be starting with the actual topic. Kindly note, we'll be starting with module E. Then after E, I'll go to A, B, C, D again. Okay. Chalo, bye. You have enjoyed it. Hope you have enjoyed this class. Enjoyed it? And mind it, you are in the safe hands, where I'll take you through, and it is very interesting topic. The more you enter into it, the more you will enjoy it. Okay? Chalo, bye everyone. Thanks, Deepika. Thanks.